Today, we're not just talking about stocks. We're talking about the pulse of Canadian innovation, the titans that shape our digital future, the companies that will either make you rich or humble you instantly. This is not a watch list. This is war strategy. I spent weeks cutting through the noise, dissecting every chart, every earnings call, every whisper in the market. And when the dust settled, only 7 companies were strong enough to remain. This is the definitive, no-nonsense ranking of the top 7 tech stocks on the TSX. And I'm telling this in first person because I lived this research. Crown number 1, Shopify, the monarch. Shopify didn't just earn the top spot. It took it by force. This is not an e-commerce stock. This is infrastructure, the bloodstream of online business. Over 2 million merchants connected through an ecosystem of 10,000+ apps, locked in by network effects so strong they might as well be gravitational. Q3 2025, revenue up 26%. EPS flipped from red to a glowing plus 27 cents. 5-year CAGR sits at 25%, unmoving, unbroken. And yet, this king carries a curse. A trailing P/E of 85, forward P/E around 65. One crack in global consumer spending, one spike in interest rates, this stock will drop like a stone. But when I look at Shopify, I don't see a stock. I see a kingdom. And that's why it is and must remain number 1. Brain number 2, Constellation Software, the architect. Constellation Software is not flashy. It doesn't brag. It doesn't break the internet. Instead, it executes relentlessly. They acquire small, mission-critical software companies, obscure firms running libraries, cities, utilities, and turn them into cash flow machines. 10 years. Revenue CAGR, 25%. EPS compound, 20%. ROIC, 25%, almost every year. The market bows to this discipline. Trailing P/E, 120. Forward P/E, 90. It's expensive, but certainty always is. Constellation is the architect of predictable wealth. And that's why it sits behind Shopify, steady, unshakable, inevitable. High voltage number 3, Celestica, the awakening giant. Now, the tone shifts. Celestica is the plot twist no one saw coming. The quiet manufacturer that suddenly turned into an AI superweapon. Q3 2025 revenue, plus 40%. AI/data center segment, plus 100%. EPS, plus 60%. 300% stock return in 1 year. This isn't growth. This is combustion. And yet, its top 5 clients make up half of its revenue. If one hyperscaler sneezes, Celestica catches pneumonia. This is the highest risk, highest reward play in the top 3. But the AI megatrend is too powerful, too global, too inevitable. And Celestica is riding the lightning. That's why it stands at number 3. Shield number 4. OpenText, the fortress of debt. Now we descend into the shadows. OpenText is the value anchor, the fortress stock, stabilizing the chaos around it. 95% recurring revenue. 100,000 plus customers. Forward P/E, 12. A dividend yield of 3.3%. It should be a no-brainer. But there's a monster in the basement. A $6 billion acquisition. A mountain of debt. A risky integration that could either transform them into a powerhouse or destroy them from within. OpenText is not safe. It is not conservative. It is a value trap or a value rocket, depending entirely on execution. That's why it sits at number 4, powerful, but dangerous. Satellite, number 5, Descartes Systems, the silent operator. Descartes doesn't shout. It doesn't trend. It just compounds, quietly, ruthlessly. Logistics. Compliance. Global supply chain visibility. 5-year revenue CAGR, 20%. EPS compounding, 25%. Recurring revenue, 90% plus. But the valuation, oof. Forward P/E around 60. EBITDA multiple, 40. This is excellence priced at full price. Descartes is the silent operator, stable, predictable, expensive, and perfectly placed at number 5. DNA number 6. Kinaxis, the overachiever under pressure. Kinaxis is brilliant. AI orchestration of global supply chains. ARR up 20% thanks to new AI modules. But the valuation. Trailing P/E, 160. Forward P/E, near 100. PEG ratio, 3.0, a scream for perfection. They're battling SAP, Blue Yonder, global titans. And at this valuation, even a tiny crack becomes a canyon. Kinaxis is powerful, yes, but the risk is too sky-high to rank any higher. That's why Kinaxis falls to number 6. Skull number 7, Lightspeed, the survivor. Lightspeed is the most human stock on this list. The scrappy fighter. The one bleeding but refusing to die. POS. Payments. Small retail. Hospitality. Brutal markets. They're narrowing losses. They're chasing cash flow break-even by FY 2026. Payments revenue is growing 20%. But the debt, the competition, the pressure. This stock has only 2 endings. A massive comeback. Or a crushing collapse. Lightspeed is a binary story. And that's why it lands at number 7. Bar chart the portfolio. Forged under pressure. After ranking all 7, here's how I would build a strategic, drama-proof Canadian tech portfolio. 20% Shopify. 18% Constellation. 16% Celestica. 15% OpenText. 12% Descartes. 10% Kinaxis. 9% Lightspeed. This is balance. This is aggression. This is defense. This is foresight. Sunrise the future, 2 possible worlds. Bull case. Soft landing. Rates fall. AI spending explodes. Shopify and Celestica return 40 to 60%. Portfolio returns 25 to 40%. Bear case. Rates stay high. Hard landing hits. Shopify, Celestica, Kinaxis drop 30 to 50%. Portfolio sinks 20 to 35%. That's why OpenText is the anchor, the fortress, the stabilizer. Microphone closing, the challenge. Now you understand the battlefield. Now you've seen the giants, their strengths, their flaws, their potential. But the question is, who are you? Are you chasing the violent, unstoppable upside of Celestica and Shopify? Or are you defending your capital with the stoic resilience of Constellation and OpenText? Your answer determines your destiny.